Hey traders, what's happening? Jamie Sedley here. It is the midweek strategy webinar, more like the end of week strategy webinar because it technically is Friday's trading day now, but couldn't do it yesterday, so doing today. Also, I'm opening this one up to the public. I think we've got a lot of interesting things to look at here as we get into kind of the so-called busier, more volatile season, right? September forward. So call it the last trimester, if you will, of the year. Before we dive in, this is an old chart that you're looking at right now, but before we dive in, let me know that you can hear me and that you can see the screen, and we'll get started. Okay, looks good, looks good. Got some responses. Okay, thanks. All right. So don't want to forget about this comparison with 98 for the dollar. Obviously for equities, it did not do anything because we were looking kind of for weakness into more or less now, and that's not what we've gotten. But we'll get to an S&P chart later. This is, again, DXY. The top is 98, 97, 98. The bottom is 2018 and 2019, okay? Now, if I bring in kind of an updated chart of DXY. Okay, here's a 240. Let's go to a daily chart. Here's a daily chart. All right. So the upper diagonal line, right up here, that chart we looked at like over here, we did spike to that other high on the 3rd, and then today, or then drop, and then today another attempt at a run, and then reversed yet again, again with ECB being today. So it's really kind of pushing on a string, it seems like up here. Sentiment's been pretty elevated for, for the dollar. DSIs, even I haven't seen today's yet, but even yesterday, dollar was 80 DSI and euro was 20. So, it'd be very difficult to kind of get a sustained move on the upside, well, as it has been. And you've got all this divergence with RSI, which we're not really we don't need to look at that now, just believe me, and some big reversals. So with that, I just kind of want to remind that there is the potential for a pretty substantial breakdown. In order to get that going, it really does require a drop below the lower diagonal line, which is way down here, okay? So even from up here to down to this lower channel line would be a decent sized move. Do want to see, let's take a look at some of the charts from today's post. All right, so this is the other dollar index, right? The Dow Jones FXCM dollar index. Levels here working out pretty good. We've got the center line, which is a channel all the way back to January, excuse me, and topping on those, on that upper parallel line here in August and early September. Today's move on the upside, excuse me, not as pronounced obviously as DXY because this is going to have Aussie in it and pound in it and whatnot, but we're right back on the what I kind of call the shelf, right? So start to get some weakness below here and things could really accelerate. I say that because you're on a median line, right? And remember, one of the concepts of median lines is acceleration through the median line. So a pretty good example of that is actually right over here, the circled area. So we hit resistance, came back to it, resistance, traded around it for a while, and then really accelerated to the upside. And then we just, kind of went for it there in August. But you're right there on the other side of it now, okay? And certainly it's been really good support over the last number of weeks, and we've been really trading around it now for a lot of September here, which, believe it or not, is actually close to halfway over. So you break below there, you can see acceleration, and you've got bearish median line here as well, which I consider a pretty decent structure to follow, considering that it was support, right, on the initial drop. So, you have two median lines in close proximity, and you get below this one, accelerate. Below this one, you could really accelerate to the downside quickly. So you've got the dollar in a pretty interesting spot in terms of possible downside acceleration. I say possible because we just don't know what's going to happen, but let's move on. The Swedish krona, remember this. If you are in here as a member, you'll remember the post from, I guess it was Sunday, where we had, I noted all the weekly reversals that we had last week, and dollar SEK was one of them. And actually, let's just bring that in real quick to refresh. But let's see, DXY, we got 50, yeah, all right, so this is DXY, weekly reversal, right? Dollar SEK also had one, okay? So you can see that you've had some pretty big turns identified by weekly reversals in dollar Swedish krona. Yes, there's some false signals. There will be with anything. Notably, 2014, you had a number of false signals, but other than that, you've had some pretty darn good ones. So if we can get downside follow through on this, that could be a significant drop coming, especially since you've got this wedge ending diagonal pattern. It's been going on for a year now, over a year. This is August of 2018 up here. So certainly a bearish potential look to this in terms of dollar SEK. All right, so back into the current chart. So shorter term chart, we're looking at a 4-hour chart. Trend line from back in July, right? 3 points, tagged the high today, acted as resistance, turning over. Kind of have a head and shoulders look to this since mid-August. So if you were to accelerate to the downside, level that you're looking at is probably around 945, simply the trend line off of the June and July lows. All right. So decent look there in terms of potential dollar weakness. And again, I always like looking at dollar SEK as kind of a proxy for European FX generally. We've seen the non-confirmations, the divergences. They do say dollar SEK tends to lead the dollar a little bit, but we have seen it the other way around too, where you have seen highs not confirmed with the dollar and dollar SEK, and it's led to much bigger turns. I know we had a much longer term chart that we looked at a couple of weeks ago suggesting just that. All right, let's go to Euro. This is an hourly chart. I have it says 4-hour, but it should be hourly. So you've got double bottom potential here, and lo and behold, the target for that is actually 112.40. That's where we were looking anyway yesterday before Draghi came out and the market responded the way it did. I will say the fact that Draghi is gone now, or will be gone soon. Today was his last press conference. That might actually be, and I'm not a big fundamental guy, but that could be a bullish catalyst in and of itself, right? Draghi has clearly been not great for the euro, and the fact that he's gone, we don't know what Lagarde's going to be like, but the fact that he's gone could certainly be a positive. And this is again the short-term chart. I'm kind of looking for support here around 1035. Week open, by the way, 1027, so that would make some sense. Again, weekly reversal here last week as well. But here's a real fun one. Today, we had, all right, so I'll put a line chart up so you can see it a little better. So we had the so-called the J spike, right, on futures. You actually didn't tick to a new low in, funny enough, in spot, but futures you went to a slight new low. So again, to review, the J spike is looking for at least a 20-day higher low, and then a close in the opposite direction, along with the range of that bar has to be greater than the average range for the last 20 days. Well, add in another condition, being that volume for the day has to be greater than, say, 2 times the average volume for the last 20 days. And look what we get. We've had literally 6 of these signals in recent years. The exact high, the day of the 2014 high, which actually was an ECB day. Minor low in June, a month later, which I think might have been an ECB day or a Fed day, I'm not positive. The December, the 2015 low, which also was a an ECB day, I remember. The election, right, 2016 US election, and then the 2018 high in January. So this, signal, if you will, or this set of conditions and circumstances has been met in recent years 6 times, and 1, 2, 3 of them ended up being the exact high for the entire year. And some are major highs. I mean, this is the high from 2014, obviously preceded the outright collapse in the euro, and in the 2018 high, same deal. So, it's not hyperbole or nuts to say that today could have actually been the low for quite some time. Now, if we go back in history and look at this, the only other times we've had these conditions met, I thought was interesting, is actually all the way back. You had one in 2001 in August, which was a high, and then you had one in December 2002, which was a low, and the euro went into huge rally mode after that. So today, very important signal, and a pretty exciting possibility here for the euro, right? Especially with everything that we've been looking at for, if you're a member in here, we've been looking at this stuff for like a year in terms of all the possibilities that we could get with the euro move. All right, moving on to the next thing that we were looking at in today's post. Cable's an interesting one. Been pretty quiet really over the last week, right? So this is the channel that we're following all the way back to the 2018 high, and between the median line, okay, and this parallel here, which was resistance throughout July, you're kind of in no man's land. Again, big weekly reversal in cable last week too, so I think you have to lean towards the long side, but right now is tough because you're into minor resistance. So if you pull back into say 2240 or so, I'd be looking to establish support there and buy for a run at the next level, which is going to be 125. 125 is the 38.2 of this drop from earlier this year. And you've also got former support there, right? 618 low, resistance up here, and you've got the next parallel, which was precise resistance on the 25th of June. So 2 levels to know in the British pound, 2240 and 25 and change, okay? Aussie, I've been kind of updating this daily, don't have a whole lot to update. I mean, I love the bullish structure that Aussie's trading within. Clearly this is an operable or a confirmed structure. We've been trading around the center line for a while. The question is the pullback that we get, if it's underway now, how far do we pull back? So, I'm open to, anything here. A very minor pullback would do nothing more than probably 68.50, which is like now, it's like in 10 pips, right? I prefer, right, a little deeper one. Frankly, you've got the former resistance up here at 68.20, and that's going to be in line with your 25 line of this fork. If I go back and look at, again, this is the 1998, I think it was over here. The 1998 comparative. Aussie is pretty interesting. So let's go to Aussie dollar. Oh, not there. Sorry, hold on. All right, should be here. Apologies for the delay. Okay. Okay. So here are all the dates, right? on the bottom is going to be now. On the top, we're going to be looking at 1998. And here you go. All right, so to review, you've got the Jan low in 98 right at the 7th, right? We had the 1-3 flash crash, 130 high, 131 high, 616 low, 618 low, 717 high, 98, 719 low this year, 826 low when I did this post. We ended up going for one more tag on the 3rd of September. 827 low was in 98. And then the pullback high came from in 98 was September 11th, 98. Okay, so obviously today being the 12th, you know, in a couple of days here. And that's what all of these dates have been within. And there's also similarity just kind of in the price pattern. So, you know, take a look at 98, right? You had this old low, the June low. Okay, came back, and that's kind of where you found support. So if we look at the June low now, it's going to be pretty close in line, by the way, with the former resistance at 68.20. So, you know, that's going to give you 68.20.30 as maybe the area where you really want to pay attention to Aussie and maybe, you know, thinking that you could get that higher low. All right. So Aussie is an interesting proposition moving forward as well. I still think Euro is probably the best of the bunch, and we can look at maybe a Euro Aussie chart there to get that point across. All right, moving on. Next chart in the deck is going to be Canadian dollar. So dollar CAD, impulse lower, 1, 2, 3, 4, 5. Looking like we're getting an ABC rally with today's little dip being the little B wave. Okay, if you got 2 equal legs up, you'd be 32.58. 32.75 is a good spot as well. All right, just former kind of support back here in April, and you've got the confluence there of the underside of the line, kind of former support line here. So we'd be looking for 32.58, 32.75 support for the Canadian dollar, or for dollar CAD, excuse me. As far as where the next drop is concerned, I'm not concerned with that right now because I'm more concerned about identifying resistance for a short. But look, if we just kind of take this to its logical end based on the parallels, you're going to have a couple levels to look at, notably way down here at 29.15, 29.20 or so, and that's going to be the low from October of 2018. And then it's a confluence of lower parallels as well. So it's the lower channel line from the 2018 high, December 2018 high. And clearly you're probably going to want to throw something on here as well. But either way, we talked about at least a test down here, okay, to start, but we don't really need to concentrate too much on that. All right, so that's CAD. And that's going to bring us to crude oil. You know, we've had crude and CAD kind of trade in and out a little bit. They started doing pretty well for a while, but you've got crude support now. I mean, today's low is right on the lower parallel. Do I know if it's going to hold? I have no idea, right? But I do know that if we're in a bigger, you know, rally phase, if crude's at least a near-term bull, it's got to hold right here. This is where you would expect it to hold. You fall below here, you're kind of in no man's land. I wouldn't want to be messing with it. But, you know, we are in the seasonal bullish kind of period for crude up through mid-October. So that combined with the structure here and the fact that you are responding to it, right? We did an early, I guess last week, and then we did today. Okay, so let's see if crude can get off of its butt. Dollar yen, real pain in the butt right now. Took a short today. Stop is like literally 5 pips higher, so it might not work out. But big level here, really. 2 legs up, 107.96. 100-day average here, which is going to be your 20-week average, and underside of this line, and basically your trend line from April and the August 1 high. All right, so I had a longer term post or chart in yesterday's post, which I think is kind of worth revisiting. Hold on here. All right. So the weekly dollar yen chart, right? 20-week average on this, which again is your 100-day average. But when you get into kind of a trending period, we've seen it in dollar yen that, you don't tend to stray too far from that 20-week average. So, we've seen it a couple times this year with resistance twice and maybe third time here again, who knows? You've got old here back in 2018, 2017. So if we're going to roll over in dollar yen, you'd think this is about as good a spot as you're going to get. But again, market's got to do it. I thought we were going to do it today after we had a really solid reaction off of early in the day, but then, we came right back and closed pretty firm. All right, let's move on to, I actually want to look at a few euro crosses. So with ECB today, right, you ended up getting some big, not just euro, but we also got some bigger euro just reversals in general. Euro Aussie, Euro Kiwi, Euro CAD. Okay, so here is Euro Aussie. All right, slice down through that 200-day average as it has been doing a couple times this year. Same thing as back in July, right? You do have a parallel over here, kind of this whole zone, right? If I can add another one here, make some sense. Let's see, hold on, let's go kind of like 45. Yeah, all right, so that whole zone, right? These parallels, it's been pretty good in terms of identifying support within this uptrend. Big reversal today again, as noted, right off of the low from July. So good action there. Euro Kiwi, somewhat similar. Euro Kiwi's been much stronger, right? As Aussie Kiwi's been firm. Kiwi's been weaker than Aussie. Not as, I don't think, as decent maybe as a setup right here, just off the initial look, because I like that Euro Aussie came from lows down here. But let's see where the fib is. And the fib's still a little lower, right? Euro CAD is a really good one though. Now Euro CAD has been in a downtrend unlike the others, but look where the reversal came from. Okay, I mean, this is median line analysis to a T. All right, you got the channel, you've got your 25 line up here, resistance, 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 resistance. You've got your 75 line down here, concept of symmetry. If you're responding to the 25, you're probably going to respond to the 75. Lo and behold, guess what happened? We made a low right on it, like literally to the tick, and then scooted higher immediately. So just within the confines of this channel, I'd be looking for a continued bounce, especially since you came from this horizontal level over here. All right. There you go. So it's not just euro dollar that did feed today on the reversal stuff. It was also your Euro CAD, Kiwi, and Aussie. My focus is going to be on euro dollar as far as a trading vehicle, but I did want to bring up these other euro crosses as kind of complementary evidence, if you will. All right. Let's take a look at SPY. Go to today's update. All right, so SPY, first the weekly chart. Big spot here, okay? Now you see the 2007 to 2009 drop. Okay, the Fibonacci levels are expansions off of that. So you're taking this and you're doing 127 0.2, which is the first, 1618, and then 2618. And look what's going on here. You've got first of all, the 127.2 was kind of minor resistance, but it was really, really solid support. Like it was, perfect support throughout, I guess, was that 14, 15, and 16. Okay, the 1618 was resistance for several years as well, right? The election, we took off on the upside, and now we are very close to the 2618. So that's going to be 303.82 in SPY. You'll notice as well these silly looking dots on the chart, okay? This is divergence with RSI. And those of you that know my definition of divergence, I've got to have RSI be below 65 in order to have divergence, because I don't want, I want a weak kind of like real petered out trend to at least suggest the possibility of rolling over from a divergent reading rather than having just overbought readings, which is actually an indication of a strong uptrend. So yes, do we get tons of false signals with divergence? Absolutely. In fact, I don't call it divergence. Is not a signal. It's just a condition, right? You can go out of divergence. Such was the case. You got really good examples coming off of like the financial crisis lows in 09, right? Divergence, okay, all over here, but you came out of it, right? You came out of it, especially here in 2013. We got to a period in 2015 where we had a bunch of divergent readings for a prolonged period of time. This is kind of like the dollar right now in the euro. We get it on the lows too. Had it in 2017. We came out of it, but now we've started to see a cluster of readings throughout 2019. Okay, so just another thing to kind of pay attention to. I put more kind of weight in this being possible divergence, or divergence, but possibly rolling over from it, because you do have this huge 261.8 fib up here at 303.82. All right. Here's the daily chart of that. So just a zoomed in version. I thought it was really interesting that you've got the line that was basically resistance for the high in July. We're right there as well. You did trade actually to an all-time high today in SPY. The S&P index did not, right? SPY did. It's not the first time. I did a little test earlier. It doesn't really mean much. Funny enough, it did happen over at this high, but you look back at plenty of times where it just didn't mean anything. So you've got that line. You've also got the very, very steep line from the December and June lows, right, which did kind of provide a little bit of resistance over here. Not very meaningful. To me, the big thing here with SPY is just, look, it's higher until it's not. If we get to 303.80 or whatever, pay attention. Let's see what happens. If you get a reversal off of it, super. Maybe it means something. Until then, 295.97, the low from 2 days ago, is a key pivot. You've got to get below that to really change anything, okay? So that's all I'm getting at with SPY and I guess the market in general. Like I said, the S&P chart is a little different, or S&P index chart, I should say, is a little different. So let's see, so here's SPY, which we just looked at. Let's go to SPX. All right, so SPX, I draw this line. Again, you're not at a high yet, and so the level's up here at 30.35. And by the way, the 2618 level for the SPX, for the index, is actually 30.47. And that's like, oh man, that's right there too. So that really might be the spot to, where you want to pay attention for anything, for near-term change in behavior, and potentially something longer term, given the significance of that that fib measurement. Another thing that we are going to want to follow, and we've been following this a lot this year, but your put call ratio in green is the 5-day average of that ratio. Okay, currently that 5-day average is like 0.88. to get bigger lows, you want it a little lower than that, or sorry, bigger, I should say bigger highs in the market, lows in the ratio. Like for example, just a cursory look, right, back at some of the peaks we've had, over the last couple of years, right? So, you were 0.85, 0.82 at some of the highs back here in 2018. You were actually not that far from where we were here for highs back in April. You had a really low reading back in July, okay? The 5-day average was down near 0.78, okay? Much lower readings preceded the high in Jan 2018. And even going, further back than that, highs back in minor ones at that, but 2016 kind of overbought conditions that gave way to minor pullbacks. You were down near that point, just below that 0.8 level. So, a couple more days of maybe some complacency and low put calls could get you down to this area. That would be, contribute to a decent setup. Until then, just kind of watch and observe, and let's see. All right, so that's going to be it for me as far as everything I had on the docket. Are there any questions at all? You guys want to look at anything in particular? For those of you, for the members here, most of these charts, of course, are going to be in today's update. I do think Euro is probably the best opportunity given that extraordinary set of conditions and reversal we have with the volume stuff. And other than that, I'm going to wrap it up. Go get some dinner. All right. All right. So I plan on doing these webinars, maybe like make one or so a month, maybe a public one. The other ones will be just for members, but I think it's, when there's maybe some more interesting things happening, I think it's good to kind of share what's going on so that more people can kind of see the process and how we're looking at things over here at SB. All right. Have a wonderful rest of your week, the one day of it that's left, and have a safe weekend. And I'll talk to you later. All right. Take care.